Emerging markets are set to outperform their developed market peers, and within emerging market equities, sustainable investing leader companies are growing rapidly. So what's driving this sentiment, and what does it look like in practice? This is a conversation well worth your 10 minutes right here on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm your host, Anthony Pastore. I am here again with two guests that you may be familiar with, Amantia and Xing Chen, both from CIO Americas. Let's get right into this conversation. By the way, good to have both of you here and to see you as we just passed our Labor Day holiday. We're heading into the fall, and we're talking about emerging markets, and we're talking about ESG, which is environmental social governance. Of course, we want to get away from the alphabet soup of ESG and talk about the real issues. So, Amantia, we often talk about sustainable investing companies, or sustainable companies, I should say, and investing in them. So what does this mean within emerging markets specifically? Because that's an area that we haven't really spent a whole lot of time talking about, the EM space.
Mm-hmm, of course.
With SI.
Of course. I mean, look, there's lots to talk about with SI, so I'm glad we came to this conversation. Let's talk about, you open this conversation talking about kind of how do you do this in practice. And then really what matters is when we think about sustainable companies is kind of a relative view, right? Sustainability means different things based on what's financially relevant to companies, and sometimes it means different things to different investors, depending on their objectives. When it comes to emerging markets, we've been looking at how relatively sustainable companies in EM look when we compare them to developed market companies, right? And we've noticed a couple differences which have been important historically for investors who are looking to allocate capital here. Firstly, one thing that I'll highlight is that a lot of the standards that we've discussed in the past around sustainability that require companies to either improve their operations or to be more transparent with investors in terms of how they're running their operations, right? A lot of these standards have been set up and codified in the European Union or by international organizations like the International Standard Setting Body. Now, what's interesting is that in emerging markets, standards exist, but they're not always in alignment with some of these kind of global or DM standards. So from our perspective as global investors, we would naturally see then EM companies which are optimizing for different sustainability standards or objectives. So that's just one difference that investors should think about that we've looked into. A second one is that data availability for these EM companies looks different. Right, so if our question is how do you invest practically? Well, firstly, we need to be able to identify companies to differentiate among them and allocate capital. Companies in EM historically have been disclosing less than companies in developed markets for a variety of reasons. Now, this may be discouraging at first. What we've also seen is that that's changing at a very rapid pace. So there's some reason for optimism there. But what this means in practice is that today, if we look at sustainability data, and we have our own CIO sustainability scores as well that we're looking at on the screen right now, we'll notice that EM companies have lower scores than their developed or global counterparts. On this chart, what you're seeing here is a histogram, a distribution of the number of companies that have a score, let's say from 0 to a 1, where 0 is worst and 10 is best on this scale, or a 2 to a 3. Again, 2 or 3 is far less than an 8 or a 9. What you're seeing on the chart is more EM companies in the blue are in that 2 to 3 bucket than global companies.
So they're scoring lower.
They're scoring
than
lower
than their developed market counterparts.
Indeed, and that's partially because they're reporting less, so we don't know what's going on as investors, and partially because the standards are different. So it's really kind of a distinct investment universe.
Well, isn't that sort of the challenge then? I mean, if as an investor, I sit down with my financial advisor and they're trying to talk to me about investing in emerging markets, specifically with ESG. I don't know what to base that on besides just maybe looking at pure performance. And there may be things in there that matter to me and my values that I want to incorporate as an ESG related or sustainable investing related company. So what are some of the other challenges? I mean, that may be part of it for you, Amantia, but when you're talking to investors, what do you say? Look, here are the risks, here are the challenges that you might face in this arena, especially on the EM side, where already historically we have less information on these companies?
Yeah, I mean, look, these are the challenges, right? And you're exactly right. What do I base my decision is what's limiting some investors.
Right.
It's also not just individual investors, but those who build investment strategies have historically been limited by narrower kind of pools of data, let's say. Now, there's some good news there, even though these are all challenges. I think if an investor is saying, why should I then allocate to sustainability in emerging markets if I don't really know what's going on, or if the standard is different, or in some cases maybe even lower, who knows, right? The answer from our perspective is twofold. On the one hand, you have to look at that trajectory of improvement. So even though I said EM companies disclose less, there's a recent study from KPMG that shows that Asia-based companies have doubled their disclosure rates in the last decade, right? So we're seeing more and more of this. A second point here is that the largest gap in terms of financing for sustainability is in emerging markets. That's when we need the change to happen, number one. That's where you need the capital, and that's where companies need capital as well as incentives to further disclose and improve over time. So if you're an investor who cares about managing their sustainability risk primarily or taking advantage of these opportunities, you want to go in that direction. Final point here, Anthony, is diversification. And I think this is kind of the thing we always talk about, right? As an investor, you care about ESG, you care about sustainability as a way to measure risks or performance, but you also should keep in mind traditional diversification elements, so you cannot look away from EM there and then miss out on these opportunities.
Right, and we always recommend a diversified portfolio for most of our investors. Obviously, there's not a one-size-fits-all for everyone, but that's a really good point, Amantia. Thanks for bringing that up. Xing Chen, let me bring you in here, because within EM equities, you do have a preference for those that are investing sustainably. So why is now the time for this, and how does it kind of fit into more maybe sort of your broader views within the Chief Investment Office?
Sure, Anthony. It's great to be here. Let me just take a step back, right? Sort of echoing what Amantia just said. When we call sustainable leaders in EM, or ESG leaders in this case in EM, we're really talking about they're probably not going to be qualified to be called as leaders in a global context based on the host of reasons that just been brought up by Amantia. So they're more of a ESG improvers in this sense. However, in a sort of EM context, from a relative standpoint, they are the leaders because they've done a better job across the spectrum of E, S, and G. Therefore, as a result, empirically, what we found is that first, they can help portfolios mitigate risk, right? And also, importantly, they can have better alpha generating features. So if we look over the past 10 years, at an annualized basis, we've seen pretty meaningful outperformance of ESG leaders versus their parent EM index. So that's sort of the structural reasons I just wanted to reiterate, right?
Sure.
So, but if you look over the past 3 years though, or even 5 years, the pictures were a little bit different because ESG leaders have actually slightly underperformed their EM parent index, driven by a combination of factors, including, for instance, China's regulatory reset in the tech space, or the ADR delisting saga, and also the global rotation from from growth into value. So, these are the reasons why we're seeing some of the underperformance here over the past couple of years. However, the headwinds that faced with this ESG leaders, a lot of it are in the past. So when we talk about this regulatory reset or the ADR delisting risk, these are pretty much in the past, right? So then if you can see the chart here, so you have already a sort of a massive derating since maybe the beginning of 2021. And now you are at a pretty attractive entry point for investors, particularly longer-term investors, to get in.
So this is really creating opportunities right now for investors. These particular points that you're making here, especially looking at that chart, you can see where there are opportunities that are still available today to investors.
Exactly.
Yeah. Xing Chen, thank you very much. I know that we get a lot of questions about what's going on in the emerging market space, but it's nice to kind of marry the idea about how it works with some of these ESG. And as you said, they're not quite leaders in this space. The ESG leaders are coming from Europe and from the U.S., but it's nice to see that there's some attention being paid here and for investors to have some options. Thank you both for being here. It's always good to be with both of you, Xing Chen and Amantia. See you soon.
Thank you for having us.
Yes, of course, of
Great
course.
to hear.
And thank you all for joining us as well. There's lots more information on this topic and a whole lot more from our Chief Investment Office by visiting ubs.com/views. That is our insights page. Plus, you can follow us on social media. We're, of course, on Instagram at our dedicated @UBS Trending channel. So give us a follow and make sure you're not going to miss any of the content that you're not going to find anywhere else. Plus, we're also on all the other channels, LinkedIn, Facebook, Twitter, and more. And as always, if you have questions about what we spoke about today, make sure you're talking to your financial advisor. Really important stuff there. Until next time, I'm Anthony Pastore. Have a great day, everyone. And remember to keep your eyes on what's trending. We will see you soon.